Accounting equation. Accounting equation signifies that the assets of a business are always equal to the total of its liabilities and capital, owner's equity. The equation reads follows. A is equal to L plus C, where A is assets, L is liabilities, C is capital. Since the accounting equation depicts the fundamental relationship among the components of the balance sheet, it is also called the balance sheet equation. As the name suggests, the balance sheet is a statement of assets, liabilities, and capital. Asset side of the balance sheet is the list of assets which the business entity owns. The liabilities side of the balance sheet is a list of owners' claims and outsiders' claims, that is, what the business entity owes. The equalities of the assets side and the liabilities side of the balance sheet is an undeniable fact, and this justifies the name of accounting equation as balance sheet equation also. The balance sheet equation always is the total value of a company's assets is equal to the sum of its liabilities and capital. For example, Rohit started business with a capital of 5 lakh. From the accounting point of view, the resources of this business entity is in the form of cash, rupees 5 lakh. Sources of this business entity is the contribution by Rohit, proprietor, 5 lakh as capital. In the balance sheet, the total assets are equal to the liabilities of the business. Since the business has not yet started its activities and has not earned any profits, the amount invested in business is still 5 lakh. In case any profits are earned, it will increase the invested amount in business. Let's assume if there is a profit of rupees 50,000. On the other hand, if business suffers any losses, it will decrease the invested amount in business. Let's assume if there is a loss of rupees 30,000. We will now analyze the transactions. You will observe that the accounting equation always remains balanced. Let's take an example. 1. Rohit started business with a capital of rupees 5,10,000. Analysis of transaction. From the accounting point of view, the resources of this business entity is in the form of cash, that is, rupees 5 lakhs. Sources of this business entity is the contribution by Rohit, proprietor, rupees 5 lakh as capital. 2. Opened a bank account in State Bank of India with an amount of rupees 4,80,000. Analysis of transaction. This transaction increases the cash at bank assets and decreases cash asset by 4,80,000. 3. Bought furniture for 60,000 and check was issued on the same day. Analysis of transaction. This transaction increases furniture assets and decreases bank assets by 60,000. 4. Bought plant and machinery for the business for 1,25,000 and an advance of 10,000 in cash is paid to Mrs. Ramji Lal. Analysis of transaction. This transaction increases plant and machinery assets by 1,25,000, decreases cash by 10,000 and increases liabilities Mrs. Ramji Lal as creditor by 1,15,000. 5. Goods purchased from Mrs. Sumit Traders for 55,000. Analysis of transaction. This transaction increases goods, assets and increases liabilities Mrs. Sumit Traders as creditors by 55,000. 6. Goods costing 25,000 sold to Rajni Enterprises for 35,000. Analysis of transaction. This transaction decreases stock of goods, assets by 25,000 and increases assets Rajni Enterprises as debtors 35,000 and capital with the profit of 10,000. The final equation as per the above analysis table can be summarized in the form of a balance sheet as under. In this balance sheet, you can see that asset side is equal to liability side.